Prime Minister May did exactly what we expected her to do, which was push back the deadline for Brexit. All right, it's big time news. Let's talk about it here at Capital Markets. Traders, what's up guys? Welcome back to Capital Markets. It's your host here, Cleveland Bishop. Hope you guys are having a fantastic start to the week. All right, last week we talked a lot about the U.S. numbers, CPI, PPI, non-farm payroll, and this week we have a lot to say about the UK. All right, so look, if you guys ever have any questions about fundamentals or about technicals, this is where you want to come. This is where you want to get those questions answered. Here at Capital Markets, we talk about the fundamentals and the technicals in detail. So comment away and make sure you guys subscribe, and we'll be right here to help you guys out. All right. So there was a vote that was supposed to be passed on March 2nd when it came to Brexit between the European Union, right, and the United Kingdom Parliament. And that vote was now pushed back to a later date. We don't have that date yet, but it just came through Bloomberg that March 2nd is no longer the deadline for Prime Minister May and her Parliament to reach a Brexit negotiation decision that fits the European Union and Brexit itself. For many market participants that assume that there isn't going to be a Brexit vote. Now, obviously, you don't see them priced into the market as of yet, mostly because the pound just pushed back to the upside in the past 48 hours or so. So many people look at this deadline as a situation where, hey, this is going to give Prime Minister May more time to come to a good decision as to what she wants to do in Brexit. Same reason why Trump just pushed back the trade war negotiations with China, right? March 1st was the deadline there. Well, they just pushed it back. Anytime you push back a negotiation, buy yourself some more time. That gives you more opportunity to get your laws passed, all right? Now, talking about Donald Trump real quick, we have seen the U.S. economy skyrocketing over the past 9 weeks. We haven't seen a 9-week correction as we have seen in this past 9 weeks since 1995, right? This is the longest bull run week by week consecutively since 1995. So is this a recovery? Was that just a really shallow dip buy that happened in the S&P, the Dow, and the NASDAQ? Well, that's what many market participants think, and that's somewhat, what we think over here as well at Capital Markets. Now, is the market going to break all-time highs? Well, it's potentially likely that that's going to happen, but how much of an explosive move outside of those highs is going to happen? Well, we don't think that there's too much gas in the economy's tank, but we're not saying that we're at all-time highs now either, okay? So whether we look at oil prices or we look at gold prices, you will see that right now commodities are turning to the upside, and man, it's just so interesting to see those types of situations. Usually when the U.S. economy is doing worse, you usually have commodity prices usually don't see commodities prices increasing when the market is also increasing. They're usually inversely correlated. So this is stuff that we're going to be looking at. We're mostly going to be looking at the continuing hike in gold prices to maybe start to push the Australian dollar to the upside. Mostly because Australia and New Zealand produce gold at a very high rate. So that's probably going to give, again, those currencies a little bit more traction. Same thing with oil. Look at oil prices pushing to the upside. Here's a quick screenshot I want to show you guys here. Trump actually sent a tweet out about OPEC saying that they needed to slow down the demand, right? They needed to increase the supply. So that way there's so many barrels out there in the marketplace that oil prices slowly start to fall, right? So that's exactly what they're looking for. And again, if you're an American citizen or anybody that drives a car, you obviously definitely want lower oil prices, because usually when you see the Japanese currency start to fall, you will see that US dollar rising. That's what we've been seeing for the past 9 weeks or so. So that's another opportunity that is here on the table. Guys, look, if you're looking for a place to take these trades, head over to capital-markets.com. One of the best brokers. We route from some of the best liquidity providers, and we have some of the tightest spreads in the entire industry. You have tight spreads, that means you guys are going to be paying less and less per trade. So head over to capital-markets.com. Let's see what happens this week when it comes to markets. I'll talk to you guys tomorrow.